Ladies and gentlemen, good day and welcome to the Q3FY22 earnings conference call of United Spirits Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hina Nagarajan, Managing Director and Chief Executive Officer, and Mr. Pradeep Jain, Chief Financial Officer from United Spirits Limited. Thank you and over to you.
Thank you, Jacob. Hi, good afternoon, everyone, and thank you for joining us on the Q3 call today. Hope all of you are safe and wishing you and your loved ones a healthy and happy 2022. I'm joined by Rita Periwal, our Investor Relations Head, and Pradeep Jain, our CFO. As is customary, let me share some headlines on our overall business context and performance in the quarter just gone by before opening it up for Q&A. Business operations remain normal through large part of the quarter. Our country's vaccination program has picked up pace. Infection rates were largely under control. Consumer confidence was inching up and the economy was on a brief sense of normalcy during the quarter, also evidenced by the increasing footfalls in public places. Improved mobility combined with festive holiday season further led to demand buoyancy. Supply side remained resilient even though input costs continue to exert pressure. Global supply chains remain disrupted with shortage of containers, highest shipping rates ever witnessed, and port congestion. Heavy restrictions were, however, back towards the last week of December as the COVID case count in the country mounted, driven by the latest variant. In this context, we delivered a robust performance in the quarter. The quarter witnessed the ramp-up of the innovation renovation interventions made earlier in the year. The second limited edition pack of Epitome Reserve, a new peated Indian single malt, which is only 3,600 bottles, was also launched in Goa. Black Dog Whiskey in its new avatar is now available in 90% top-line salience markets. Our innovation of Royal Challenge American Pride was launched in Goa. With this, it is now being launched in 3 states, following Assam and Madhya Pradesh. Renovated consumer bundle on Signature Whiskey has now reached more than 70% of the national market. The use of recycled glass and paper cartons for the packaging has landed very well with consumers and drives differentiation. Our pocket scotch format innovation, Hipster, was extended to J&B Whiskey in July and Smirnoff Vodka in September 21. The same is currently ramping up on distribution as per plan. As we communicated earlier, both Signature and Royal Challenge American Pride interventions are in service of strengthening our presence in the upper prestige segment and premiumizing the portfolio. Couple of other call-outs for the quarter. We launched our digital platform, in.thebar.com. This is a place where our consumers can engage with our beautiful brand home, explore the latest lifestyle trends, find out food pairings with our liquids, the best gifting possibilities, and even make their own cocktails based on the occasion they are looking to celebrate. Johnny Walker Revive campaign reached 100 million plus consumers with Revive the Night, messaging where the focus is to re-energize socializing at our favorite food and beverage outlets. On the policy front, both Delhi and West Bengal operationalized their new policies during the quarter. Additionally, we also saw the positive trend of state tax rationalization on DIO segments continue during the quarter. Both Maharashtra and West Bengal made changes on this front. We've made progress in helping create a more sustainable world under Society 2030 Spirit of Progress strategy. We continue to reduce our greenhouse gas emissions from our own operations and enhance our water use efficiency. Our plastic waste collection drive and water replenishment initiatives are making good progress. We continue to run the anti-drink drive program and impart training to curb underage drinking. Let me now call out the highlights of the financial results announced on 25th evening. Our reported revenue increased 15.9% with underlying growth at 14.3%. The P&A segment grew 20% while there was a marginal 1.7% decline in popular. I am very happy to share that this is our highest ever NSV performance in a quarter. Off-trade continues its resilient performance. Continued recovery in on-premise footfalls caveating here that the third wave now and the positivity rate going up still in many states will impact this in the coming quarter. Healthy price mix continues to be a tailwind driven by the top end of the P&A segment growing high double digits. Inflation has been on an increasing trend during the quarter. Continued management focus on favorable product mix and a culture of everyday efficiency partially offset the commodity inflation. Underlying gross margin was 44.3%, down 31 basis points versus prior year same quarter. Our reported marketing investment was 10.3%, up 125 basis points. We stepped up investment to strengthen brand equity, premiumize our portfolio, and expand our digital capabilities. Underlying EBITDA margin stands at 17% for the quarter, up 159 basis points, primarily driven by operating leverage. With the full impact of the accelerated debt retirement since April 2020 and the lower interest rates, the underlying interest cost in the quarter is 56.8% lower than prior year. USL legal entity reached a debt-free status on 31st December 2021. CRISIL upgraded its rating on USL's long-term bank facilities to AAA/stable, while reaffirming its A1+ rating on the short-term bank facilities. Profit after tax was at rupees 291 crores in the quarter, a 26.7% increase versus prior year. In conclusion, I would like to re-emphasize the following. We are happy with the current momentum on the demand front and are focusing on sustaining the same. As I mentioned also in my press release, external operating environment will continue to remain challenging in the near term. We are conscious of the rising inflation headwinds and are therefore working continuously to expand the pipeline of value chain productivity and revenue management initiatives. Our portfolio, with the focus on innovation and renovation, is well positioned to capitalize on the rapidly growing premiumization in the category, and we remain committed to sustainable, profitable growth and long-term value to all our stakeholders. Last but not the least, we are currently in the final phase of the strategic review of our popular brands that was announced in the Jan-March 21 quarter, and as you would have seen, we have extended it by a quarter to land a meaningful outcome. With that, we can now open the line for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants, please limit your questions to 2 per participant. The first question is from the line of Abneesh Roy from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. My first question is, one of your key competitors, Pernod, is launching branded retail outlets. So if you could tell us, is there a good potential on this, and what would be your thought process? And in the markets where you have handled leadership earlier in Africa or say in any other market, does it make a lot of sense to have your own branded retailers?
Hi Abneesh, how are you? Thanks for your question. I mean, yes, we've read that Pernod is looking at launching these branded outlets. I mean, I think the situation differs from market to market. There were some countries in Africa where it made sense to do that, both for reach and visibility reasons. And, in some markets, it just did not make any commercial sense. So this is an area which we will review and wait and watch. For the moment, we are, focused on the strategy that I've outlined a few months ago. Focusing on premiumization, our, product broad-based participation in the prestige segment, and really accelerating our luxury and premium portfolio.
Sure. And one follow-up on this. So, inthebar.com, could there be a home delivery opportunity longer term because you exited HipBar and you are currently focusing more on customer engagement and the branding aspect? But longer term, could this also be a home delivery platform on your own?
Absolutely, Abneesh. I mean, we are very excited about the opportunity of home delivery, which has unlocked during COVID. And eventually, yes, I mean, depending on the regulatory environment, how the model grows, there could definitely be an integration in this for home delivery.
Sure. Last question. So ad spends as a percentage of sales in the earlier quarters was more like 6 to 9%, and you did say the reason behind 10.3%. So is this a one-off? Because now the cost inflation is a key concern for every consumer company. So would you like to make it lower in the near term because of the cost inflation?
So, I mean, Abneesh, we have, increased our A&P spend in the quarter gone by to support the renovations and innovations that I've talked about. And also because on-trade was opening up and, we had calibrated spend in the previous quarter and we brought it back as on-trade came back to normalcy as well as peak season, right? So, I mean, the last quarter was our peak season. So, on a yearly basis, I would say that we, look at a full year and we have, talked about 8 to 9% investment for the full year. This I consider to be a very good investment and not a bad cost. So, we would like to continue to invest in our brands and support our growth. And, should we reach a stage where there's extraordinary, change in environment, then of course we will review every line of the P&L. But at the moment, we see, our plans are focusing on investment on our brands.
Sure, that was very helpful. Thanks. That's all from my side. Thank you.
Thank you, Abneesh.
Thank you. The next question from the line of Arnab Mitra from Credit Suisse. Please go ahead.
Yeah, hi, Hina and team. So my first question was, if I look at the prestige and above growth of 20%, 12% of that is realization growth because the volumes have grown at 8%. So this is the second consecutive quarter you've seen very high realization growth. If it is largely mix driven, is it something that can sustain this kind of a YOY increase in realization? And do you worry that once the duty free channel opens up, maybe somewhere 6 to 8 months down the line, there could be a significant change because people go back to buying the scotch in the duty free channel?
Thanks very much for your question. Look, I mean, premiumization, renewed strategic focus on the P&A category, of course, a favorable regulatory environment which has folded over the last few quarters, and the muted global travel have all supported this strong price mix and growth. I mean, historically we have seen about 4-5% price mix, and now we are seeing about 10 to 12. Our expectation is that this will settle over the next few quarters at maybe somewhere in the middle, right? Maybe 7-8%. But with our premiumization strategy, we believe that is a sustainable price mix to deliver.
Understood. Thanks. And my second question was on your comment on input cost inflation. If you could just help us understand incrementally as you move into March quarter versus December quarter, what is the level of additional inflation across ENA and glass? And would you require significant efforts to mitigate it, or it is more in a gradual curve and therefore with productivity and things like that, you could be able to offset it like you've done in the last couple of quarters?
Yeah. So Arnab, I'll take that. Look, as Hina mentioned in her opening comments, inflation is on a rise, and pretty much the two commodities that you have mentioned, we are clearly seeing an upward trend in that, right? And like we have always said, we are trying to do what is in our control, which is accelerate our productivity pipeline. We are trying to draw up plans to increase that realization over the coming quarters. But inflation definitely on glass and ENA is inching up. Right, so we are making our best efforts to mitigate to the extent.
And Arnab, I would also add that we are making a very strong representation to state governments through the industry associations, highlighting that this is a very inflationary environment and a unique year, and therefore encouraging them to give us pricing flexibility, just like other industries have, and even the the price controlled drug industry has. So our representation is ongoing, and we're going to continue that through this new excise period that is coming over the next few months.
That's right. The excise cycle is on, pretty much on from now till about April, May. So we are working with the association for the pricing.
And Pradeep, any quantification on at overall RM index level, what would be the inflation that you are incrementally seeing sequentially?
Yeah. So Arnab, our sense is that the total inflation in the coming quarters could range in these are very broad ballpark numbers I'm giving, right? It could range in from about 4 to 5% on the total portfolio.
Okay, thanks. That's very helpful. That's it from my side. All the best.
Thank you, Arnab.
Thanks, Arnab.
Thank you. The next question is from the line of Manoj Menon from ICICI Securities. Please go ahead.
So hi team. So one of my questions was actually just taking off from what Arnab's clarification and your responses. It was in fact one of the things I wanted to discuss. So when I look at the policy changes implemented by many state governments over the last 12 to 24 months, it's extremely encouraging. Something which has never happened. So in a cluster it seems to be happening. So there's something definitely changing top down. Just wanted to check, push the envelope a little more on that. Can we assume that the willingness to change the historical templates and grant price increases and treat the alcohol industry different versus what it does? So what sort of that sense on the pricing component at the policy front on those states which has been adamant in the past?
I mean, I think there are two. Manoj, hi. I think there are two different areas, and while we are seeing the overall policy changes being positive on the route to market side and duties on BIO particularly, and that is, basically to bring down prices on parity with neighboring states, etc. I think pricing remains a discussion with every individual state, and our hope is actually that the government will understand that it is a very extraordinary year in terms of inflation, and we continue to advocate and represent on pricing as the association, and our intent is to work with them on a win-win where we are able to balance the pricing and the volumes and their revenue for them, right? I mean, there has been some positive price development in Assam, for instance. We got an out-of-turn price increase. So this is an ongoing conversation with states, and I'm afraid I can't generalize one way or the other.
Fair enough. I get it actually. I get it completely. Just quickly, two things actually. One top down and one bottom up. If I may. Now, after about 9 months back in India since April last year, just your perspective that you would have had a certain expectations on the India which you left and then when you're back. So from a United Spirits lens, if I take it, let's say from a functional lens, right? So one is policy, sales, marketing, HR, finance, supply chain. Which are the areas which surprised you positively, and which are the areas which, let's say, there's more work to do? And the last question, that's one. The second, bottom up, is I know it's too early. It's just under a month, after the implementation of the Maharashtra import, duty reduction, etc. Here, what are the price elasticity benefits? Early signs telling you on what the consumer is telling you through his, let's say, behavior. Thank you.
Thanks. So, I would say that overall, I think my surprises have been pretty positive in the sense that, we worked on this strategy and announced it only very recently. And I think the premiumization speed has surprised me quite positively. Just the consumer demand momentum, right, and the market potential that, is there for our Alco-Bev has surprised me very positively. The speed of it. I could already see the premiumization trends as I came in. But, the price reduction in BIO, for instance, the positive policy developments in 3-4 states almost coming one after the other has also been a very pleasant surprise. I think there's more to do clearly on inflation, as I've mentioned, right? So, it is an extraordinary year. There is inflation on international logistics. There's inflation within the country. And, while productivity is embedded in our organization, it's in our DNA, we definitely, need to do more because of the headwinds. And certainly, I would say that, continue to represent to the government on pricing flexibility, right? Would be more to do from my side, and a journey on manufacturing footprint optimization that we have that is well underway for us, but nowhere near finished. So I would say these are the more to do areas.
Understood. Sorry, thanks for that. Just one clarification, if I may. I understand there's an interest of time angle comes in. Look, 100 factories, now close to 50. So you're essentially saying there is still opportunity on cost opportunities there.
Definitely. I think there is still more to do. We have not reached an end state yet, and this is constantly. Hello?
Yeah, please.
Sorry. So yeah, I mean, to answer your question briefly, yes, the manufacturing footprint is not yet at its end state, and we think there is more to do. And you had a question on Maharashtra, the price elasticity on BIO. So the early signs are very positive. We've definitely seen, consumer traction build behind the BIO brand with the price reduction, and our brands are actually going healthy double-digit there.
Thank you so much, and wish you good luck, team. Thank you.
Thank you, Manoj.
Thank you. Participants are requested to limit your questions to 2 per participant. The next question is from the line of Avi Mehta from Macquarie. Please go ahead.
Hi, team. Just had one clarification on the near-term challenges that you've called out. With cases kind of moderating, have you seen demand environment also kind of improving? Is there any sense on that you could kind of highlight from that perspective? And B, from a regulatory aspect, we've seen MP come out with a new policy, but any other new policy discussions where Delhi could use as a template? Thank you.
So I think the situation on cases is varied by state, right? So some are moderating, some are still going to the peak. And we have, in some states, the weekend closures, night curfews, etc., have impacted, footfalls and, slowdown. But like we saw in the previous wave, we expect that the recovery comes quite fast as, things open up. And as you are aware that, this wave is not being seen as, bad as the previous wave. So, people are not panicking, etc. So we expect normalization to come in very fast as these restrictions go away. So I would say that, there is some disruption in some markets where there are closures, but it is not worrying us, as was the case in COVID wave 2, where it was really very strong. And, even internally with our people, we see a lot of absenteeism, but moderate cases, mild cases, and therefore we are able to manage those disruptions. So overall, I think as cases moderate, we do see positive momentum come back.
Yeah. And Avi, if your question was referring to the last quarter gone by, that as the cases moderated, did we see a demand pickup? Yeah. Absolutely. Hina mentioned that in her opening comments, that we did see on-premise almost come back to the pre-COVID level of footfalls, etc. And that's kind of reflected in the quarterly performance.
No, Pradeep, what I was trying to say is that is the sense then that from a demand side, things probably are not as bad as we should kind of. Is that what we would kind of argue? Is that a comment? As of now, I know things, there are a lot of things that might change, but as of now, it does feel like that. Is that a fair read-through of the comments?
Yeah, that would be fair. A little bit of moderation in view of the restrictions that are coming in, etc. Right? Okay. So the first 4 to 6 weeks, right, as we kind of go into these restrictions, there'll be a little bit of moderation.
Perfect. And on the technical front,
MP has just about come in, it's just been announced. We are looking at the full impact of that. And I think that would make, 4 or 5 states with big regulatory changes. At the moment, no other big one being discussed. But, the ones that have happened basically will, need to fully roll out. As you know, that you may be aware that even Delhi, I think, while the route to market has changed, all the outlets have not yet opened, right? So that's still playing out, and West Bengal only started in November. So there's a lot that will happen in these unfolding, but I think the developments are very positive. Even MP, I think, it drives more affordability, prices will come down, right? And accessibility, now you have composite liquor outlets. So I think the good templates that are being rolled out state by state.
Okay, perfect.
To add to that, Avi, which is what Manoj also mentioned, if you look at the last 12 to 18 months, there are a lot more positives on the policy front, right? Earlier it used to be more balanced between the pluses and the minuses, right? Yeah. But call it, Hina jokingly called it a beginner's luck, right? but yeah, we are very, very happy with what we are seeing.
With that, if I can ask, is there any update on the UK trade deal as well, or nothing as of now? I mean, have you heard anything over there?
No, I mean, the talks are underway, as you know, and but we know this is on the agenda, but the timing, quantum, phasing is unclear to us still, so there is no update yet.
Okay, thanks a lot. Thank you very much for this.
Thank you so much.
Thank you. The next question is from the line of Alok from Ambit Capital. Please go ahead.
Hi, Aditya. Question is a set of numbers. My first question is, would you like to quantify, if at all, there was any impact coming from any market disturbances, be it say Delhi change in route to market or lockdown curfew in the last week or 10 days of the quarter? Was there any impact that you want to quantify?
I mean, difficult to quantify, but I can give you the, Delhi, Delhi example, right? So Delhi has closed down, the market for us. I mean, basically, I think the stores are only operating a couple of days in a week, right? And the weekend curfews are definitely impacting, footfall and sales, right? So, I mean, for sure there is an impact.
Okay. No, so where I was coming from is that, this is a quarter where off-trade has largely been back to pre-COVID. On-trade has largely been back to pre-COVID. Off-trade has only been improving. And after that, while it's encouraging to see 8.5% ENA volume growth, but I think I would have expected a bit more. So that's why I was checking. Plus, we have the positive impact of restocking of Black Dog and Signature also, right? So that placement benefit also we would have got. So that's why I wanted to sort of clarify on any market disturbance impact.
Yes. Yeah. So Alok, it's a bit of a setback, as Hina laid out but I mean, we can't control the pandemic, right? And we just have to get used to kind of working around it. We are very happy with how we've responded to the first two waves, and we believe we will absorb this also. And like Hina said, we don't expect the restrictions to continue for a very long time, right? So hopefully it'll be shorter duration.
Got it. My question was more from okay. So my next question is on EBITDA margin guidance. Right now, we have been holding on to this guidance of mid to high teens. If we look at this quarter and the previous quarter, we are closer to 17.5%. Next quarter also, there is no reason to believe that we would be anywhere below 17% maybe. So in that light, are you just trying to defer the guidance change because you're waiting for outcome of the strategic review of popular brands, or anything else that you want to highlight on that?
So actually, it's nothing to do with the two things that you have mentioned, right? We believe that because of the peak season, it's the highest NSV that we clock during a year, right? So therefore, the quantum of operating leverage that we get in our P&L in this quarter is the highest, right? Now, if you take it for an extended period of time, we have by and large been in that range of about 16.5-ish, right? So, and which is what we have maintained that, mid-teens we've already achieved, right? On a sustained basis, right, we still have some work to do till we reach the high teens, right? And therefore, we are just kind of, keeping our milestones first towards that level. Once we achieve that on a sustained basis, then we will come back to all of you and provide, the next guidance, the next level of guidance.
Okay. If you may, I'll just have one clarification on point on one of earlier participants' questions, if I can go ahead with that.
Yeah, please go ahead.
Okay, so one of the previous participants asked a question on India-UK treaty. Now, of course, it's been in the papers. I just wanted to double click on that. Is there something to do with state tax also and the central tax also, or whatever reduction happens directly flows into your calculation completely, and there's no state involvement in that rate change? That's
Actually, let me take that. I mean, the component is central tax, right? It has nothing to do with state tax. It's the basic customs duty. However, we don't know how this will play out, right? So once the customs duty decreases, we don't know how much the quantum will be, what will the phasing be. And we don't know whether the states will have any actions, will take any action. So, it will have to be a balance between what gets reduced at the central level and, what the states do, right? So, and that's very difficult to predict, quite honestly. So, overall, if, the customs duty reduced and, the states don't put any additional taxation, it would be a favorable outcome for Scotch. The quantum and, the timing will decide how much, right? So it's quite difficult to quantify that at this stage.
Okay, perfect. But Saturday if the central were to reduce from X to say half of that or whatever, then assuming no state involvement, direct benefit goes to UNSC.
Direct, no. So I'll just caveat that. Consumer prices will reduce.
Yeah,
absolutely. Yeah.
There'll be no benefit. Benefit will come in terms of hopefully a higher
demand.
Yeah. Volume, absolutely. Yeah. Yeah. Thank you very much for that.
Thank you.
Thank you. The next question is from the line of Jaykumar Doshi from Kotak. Please go ahead.
Hi, thanks for the opportunity. A couple of questions from my end. First one is on, there are some favorable policy developments on the BIO front, at the state level. And if there is more favorable sort of, reduction in tariffs through UK trade, then, where do you see your BIO salience? And if you could give some color, what is BIO salience today as a percentage of your overall sales in value terms? Where do you think it can sort of go in the next 3 to 5 years along with your initiatives of premiumization and some external tailwinds? And my understanding is that, you would be making a distribution margin of somewhere around 10% on BIO portfolio. So is that understanding correct? And if so, then does it mean that if BIO salience goes up, is it EBITDA margin dilutive if it ends up cannibalizing some of your BII products? So that was first question.
Okay, so let me take that, Jay. I think we responded to this in the earlier sessions also, but let me repeat it, right? So overall, our Scotch salience, just a minute, I'll need to. Yeah, can you hear me? Sorry, there was a call coming back. Yeah. So I was saying that overall our Scotch salience between the bottled in India and the BIO is in the range of about 22 to 24%, depending on the quarter, right? So that's broadly the salience of the business, and it's split broadly 50-50 right now, right? Now clearly, as Hina has articulated in her strategy, we want to just break out on the growth front on this. So a simple logic of math, the salience will continue to grow up, right? So that's a response to one part of your question. The range of EBITDA margin that you have mentioned is absolutely right, Jay. Broadly in the same, it varies, but broadly in the same range of a weighted average. So that's absolutely fair. I think what we want to share is that it's highly EBITDA rupees per case accretive. I understand the percentage part, right? So yes, you're right. The percentage is lower than our portfolio percentage, but the sheer upweighting that we get on rupees per case, that just provides a significant operating leverage on your entire business algorithm. So just bear that in mind, right? And we'll be happy to share, more detailed numbers in one-on-one session, etc. But that's broadly the concept. And again, as we have mentioned earlier, that we do not invest anything in fixed assets and long-term capital assets, right, for this part of the portfolio. So it's again hugely accretive on our return on investment.
So is there any room or any sort of potential for United Spirits to negotiate or renegotiate that with the parent? Is this a global norm in terms of 10% distribution margin?
Yeah, so I should have clarified that, Jay. Sorry to kind of butt in, but I should have clarified this. It's all governed by international transfer pricing norms, right? And therefore, I don't think there is any room for negotiation, right? That just exposes the global corporation to huge tax exposure, right? So it's all driven by the global transfer pricing norms.
Correct. That's helpful. Second, on home delivery, which states are leading today? Do you have any data in terms of, any color in what is the salience of, delivery sales in the states that are leading and, some color if you can provide?
Yeah, so I'll take that. I mean, look, home delivery was a great unlock that came during COVID. As you know, it's in 6 states, and basically, I would say that these models, they always take time, right? So my experience, even from China, tells me that e-commerce models, home delivery models, undergo a lot of change, take a lot of time till they reach tipping point, and then one day they do, and they become very attractive. I would say of all the states, I mean, for instance, as an example, West Bengal is showing some traction. And basically, West Bengal, I think 3 to 4% of our sales are coming through home delivery. So that's very promising. And the others are evolving. So we remain very excited about this channel.
Thank you so much. That's it from my end.
Thank you so much.
Thank you. The next question is from the line of Percy Panthaki from IIFL. Please go ahead.
Hi team, congrats on a good set of numbers. My first question is on the premiumization trend, the increase in the realization per case that you have seen at 11%, and you mentioned that it would stabilize at somewhere around 7 to 8% versus a historic trend of 4 to 5. So what I wanted to understand is two things. One is this 4 to 5 going up to 7 to 8. Is this overall industry phenomenon driven by the consumers maturing, or is this something specific to United Spirits? And secondly, if it is specific to United Spirits, at least partially maybe, can you give us an idea as to what exactly are the measures you have taken to boost this from 4-5% going up to 7-8%? What are you doing differently now versus a year or two ago?
So I would say, I think it's a combination of both, right? So I think there is a definite premiumization trend acceleration for the market, and every player will be, taking advantage of that. I think the couple of areas where it is unique to USL is that one is that our prestige and above portfolio, right, is growing ahead of popular. And that is a shift from, the previous periods, right? And this is a shift and the strategic focus we have driven now in our new strategy. And even within P&A, right, as I mentioned in my strategy, that we are now looking at broader based participation across the various categories within prestige, so lower, mid, and upper, and we are strengthening our presence in all these three, right? So with the innovations that we have driven, like, the signature renovation in upper prestige, which is very differentiated and, will grow signature faster, and similarly the, launch of Royal Challenge American Pride, which will again, make us grow faster in upper prestige. So, that will also give us the upweight on price mix. So, there are a couple of factors unique to us and an overall industry trend as well.
And is BII, BIO portfolio within the P&A growing faster than the other sub-segments of P&A?
Definitely. I think that we've seen for the last 2-3 years, that phenomenon we've been seeing. And actually for us, the renovation of Black Dog, for instance, has really accelerated the growth of that brand. And, Black and White whiskey is also doing really well. So definitely they are growing faster, yes.
And this 10% margin, distribution margin, does it apply to BII also, or that's relevant only for BIO portfolio?
So, So Percy, for the global brands, yes, it applies similarly because the liquid comes from there, right, and it's a related party transaction. So therefore it applies. But for the USL brands, everything is housed in the USL brand. For example, Black Dog is a USL brand, right? So everything is, we retain everything.
Understood. Secondly, on cost inflation, I think Arnab had asked this question and you had said that there is a 4 to 5% kind of cost inflation. Just a clarification here, is it 4 to 5% incremental March quarter versus December quarter that you expect? Or is it 4 to 5% versus 12 months ago that what you're witnessing?
So versus prior year,
Sorry, I can't hear you.
Versus prior year, same quarter.
versus prior. But is there any additional sequential inflation versus whatever inflation you have seen in December quarter? Do you see any further inflation in March quarter on a sequential basis?
Yes, Percy, right? So two things, right? I mean, just I'll provide the headlines. One is ENA was reasonably flattish, right, for the last 3 quarters, right, versus prior year. But now, as we have always said, that the inflection point is the ethanol blending price, announced by the government, right? So we know that the oil marketing companies have given some increases to the ethanol producers. So that will lead to some amount of inflation in our ENA portfolio, right? And similarly, the inputs on glass, right? Be it soda ash, be it furnace oil, be it LPG, they're just rapidly growing, right? In fact, they've gone up by almost 40 to 50% in the last 6 to 9 months, right? So there is some amount of sequential inflation also. Yeah.
So does this hit the bottom line, or is there any way that you can sort of mitigate it through some measure?
Percy, that's the one which we all said. Look, we run productivity on a quarter-on-quarter basis, literally on a day-to-day basis, what we call everyday efficiency, right? And in a year in which inflation is a little muted, we carry some part of that productivity into our margin benefits, right? Or it gives us a little more headroom to plow back for growth, etc. In a year in which the inflation is higher than the productivity, yes, we take a temporary short-time kind of a blip, right? Like Hina mentioned, we continue to work with the state governments for pricing advocacy, right? So we are at it. Whatever we can control, we are at it. Let's see where we land up, right? But yes, inflation is on the upsurge.
Okay, that's all from me. Thanks and all the best.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Latika Chopra from JP Morgan. Please go ahead.
Yeah, hi, Hina and team. 2 questions. The first is if you could share the brand spend breakup between BIO, BII, and the other P&A brands. That's my first question. And also, if you could share, how is the share of different channels or mediums looking in the overall brand spend mix for you now?
Yeah. So Latika, let me take that. We don't divulge that, right? I mean, all we can share is they follow pretty much the realization ladder, right? So our investment rates are obviously higher at the higher end, right, and lower at the lower end, right? That's all that we'll be able to share at this point of time, right? And on channels, I mean, honestly, we just don't have that level of data granularity in the country, right, to be able to track it, right? Broadly, we know that our off trade is roughly about 70 to 75%, and on trade is about 25 to 30%, right? And like Hina mentioned, that's what it was coming back to, right? October, November, etc. But now with the revised set of restrictions and the third wave, we could again see a little bit of a dent in that, right? But otherwise,
No, I think I think I didn't ask the question rightly. I was talking more about brand spend breakup for the channels, whether digital, offline, those mediums.
Yeah. So again, I don't think we have historically shared that right now. We'll have to kind of reflect on this, whether we want to share this, Latika, right? But overall, A&P 8-9%. Our sense is that we won't be dramatically different from the rest of the industry in terms of the channel spending.
Sure. The second thing was any specific or any meaningful changes that you're currently working on from a GTM approach, considering you will look towards a more stabilizing environment post-pandemic that you may want to highlight, which is also helping with this whole P&A growth being pretty good.
I mean, one thing is, Latika, that with the positive developments on the regulatory side, I think the opportunity to create a much better shopper environment and retail environment is a really big opportunity, right? And obviously, as the accessibility and affordability of our brands is growing in the different states which we've talked about on the regulatory development, we are definitely looking to transform the retail landscape for shoppers and invest in that, right? So that is a big thrust in addition to, our premiumization strategy. And we will continue to. I mean, we've done, a lot of investments. Even for number one, we did ERE points. We've invested for Johnny Walker, for, Black Dog, for Black and White. And we will continue to, continue to increase this investment, expand this investment as we see the opportunity.
All right. And just lastly, any flavor on the capex and how should one think about dividend payouts eventually now that you are debt free?
Yeah. So capex, no change. Pretty much will be the same, right? I mean, our philosophy remains of keeping an asset-light model, right? So that we will continue, Latika, and you would have seen that, over the last 3-4 years, capex has been pretty much in a narrow range, and that's what will probably continue. That's one. And dividends, actually, debt-free is not really the trigger. The trigger is unfortunately the wipe out of the accumulated losses. That's a Companies Act requirement. But again, you guys are as close to the numbers as we are. Hopefully, over the next 3 to 4 quarters, we should be able to wipe that out also. Therefore, we should be into the dividend distribution phase.
Great. Thank you so much.
Thank you, Latika.
Thanks, Latika.
Thank you. The next question is from the line of Shirish Pardesi from Central Capital. Please go ahead.
Hi, good evening, Hina and Pradeep. Thanks for the opportunity. Just stretching on the earlier the question which was asked on Maharashtra policy change. I was more curious. You did mention it's growing double digit. Is it volume double digit growth we are seeing? And maybe if you can help me, what was the contribution from Maharashtra a year ago and now in terms of overall portfolio?
Yeah. So Shirish, let me take that, right, and then maybe Hina can build on it, right? So I mean, we've never shared state-wise saliences, etc. That just makes it too complicated on an ongoing basis, right? So we don't want to divulge on that, right? But I think suffice to say that now that we have seen this rationalization of state taxes in the BIO portfolio in 5-6 states over the last 18 to 24 months or 36 months, etc., we get a significant multiplier. Right, we get a significant multiplier on volume, right, and therefore the growth becomes very, very healthy, right? I mean, that's all. I don't know whether Hina wants to add.
No, I think that covers this here.
So, Pradeep, I got that what you're saying. I mean, I don't want the specific answer, but can you give the range? What is the lowest and what is the highest? I mean, is it fair to say that the growth is between 10% to 50%?
Yeah. So it's more towards the higher end. It's more towards the higher end.
Okay. And parallelly, when we see the mix change between BIO and BII, was it towards the BIO side or it is more of the rub-off effect which we have seen in BIO portfolio for us?
I think it varies by, state to state, right? So in some places where, the BIO prices are more favorable, sometimes the mix switches to BIO. But I also think that there is a core group of customers who are being addressed by our different brands, right? So, I mean, Black and White, for instance, is really addressing the young, casual drinker, food pairing, etc. Whereas Johnny Walker Red Label, it has its own set of customers. So, I think it's not possible to generalize, this phenomenon which does it switch massively. I think there is, in some states, a movement into BIO where the BIO prices become more attractive. But equally, there are a core, set of consumers for each brand who remain loyal, right, to the brand.
Okay. Just let me hop on again to a little more deeper. This growth, what you have mentioned, is seen on trade or off trade channel, or both are seeing the similar growth?
Both. I would say the consumer demand momentum is there in both the channels. I mean, when COVID closures happened on trade, we saw the off trade, more than pick up the volume, and in-home consumption became very big. As the footfalls have come back to on trade, they are also, picking up demand momentum. So both of them are doing.
Okay. Just last question on Pradeep. With change in mix and portfolio, how one should look at the tax angle for next 4 to 5 quarters or maybe next 2 years?
Just tax
mix change.
Yeah. So when you say tax, is it what? Indirect taxes? Direct taxes? Sorry, I didn't get the question.
Tax rate for the company.
Effective tax rate.
Okay, so that's
I'm saying ETR.
Yeah, so this is the effective tax rate, the effective direct tax rate, right?
Yes.
Okay, so that by and large it stays in that the 25% range only. We don't have any big variances. I mean, obviously at times things like when we have done raise the bar, etc., we obviously don't consciously claim a tax reduction on those kind of spends, etc., and that's when the effective tax rate kind of goes up. But otherwise, the effective tax rate stays in a narrow band of about 25% and around.
Thank you, Pradeep, and all the best to you and the team. Thank you.
Thanks.
Thank you so much.
Thank you. The next question is from the line of Prakash Kapadia from Anivet Portfolio Managers. Please go ahead.
Yeah, thanks for the opportunity. I had, two questions. Post the duty reduction, what we've seen in Maharashtra, how are the prices comparable with key metro cities on, some of these Scotch brands? And, how are consumers looking at BIO brands from here on? Because, now with the reduction in the Scotch duties, custom duties, Red Label is almost, 25% cheaper than maybe a Black and White or a Black and Dog. So what happens to, some of these BIO Scotch brands, and is there a room for price reduction in the BIO segment to push from our end to the government? Are we thinking on those lines, working on those lines? So some thoughts will be helpful.
I mean, Maharashtra, basically the prices, end consumer prices came down by about 35%, right? So 35 to 40%. So I would say that if Delhi is the benchmark on pricing, Maharashtra is just marginally above the Delhi pricing, and therefore now very affordable, and so you don't see much need for interstate movement, right, of products. So, and I know that people in Maharashtra are really appreciating this price change. So obviously that is positively on consumer demand. And like I mentioned, I think again the interplay on categories is price, and it is on loyalty to certain brands and the reason for adopting these brands. So I'm not sure what your question was on the price. Working on the price, was it related to BIO brand?
Yeah, BIO, because after the reduction of the Scotch, imported Scotch, now Red Label is 25% cheaper as compared to a Black and White or Black and Dog. I'm talking more of Maharashtra prices. So what happens from a consumer standpoint? How do they look at this segment now? So
So I got that, and I said that we've been seeing some shifts in some markets, but a hardcore consumer group that stays with the brand, and actually our renovations also are driving continued engagement with, say, Black Dog, right? So I think you had a follow-up question on working with the government on drop-off, and I didn't understand whether because the drop on BIO.
It was BIO. So is there a room for reduction in BIO prices from here on, say a Black and White or a Black and Dog?
Because BII then, okay.
Yeah, BII. Yeah.
Right. I think that is something that we continue to work with the government on. But I mean, as per the pricing ladder that exists on in the market, at this point in time, that is not a focus area for us.
Understood. Thank you. All the best. Thank you.
Thank you so much.
Thank you. The next question is from the line of Chanchal Khandelwal from Aditya Birla Capital. Please go ahead.
Hi, thank you. Congrats, Hina and Pradeep, on the good set of numbers. Business luck is really flowing out. So on my question, since you have answered the 10% margin is what you would look at in BIO, and if you look at EBITDA per case for this quarter, it's 217, probably the highest EBITDA per case you would have made in last 18-19 quarters. My question is twofold. One is, do you as an organization look at EBITDA per case for Prestige and Popular? And what is the fixed cost per case if you run in the organization? The reason why I'm heading into assume that you decide on Popular, how much part of the cost will retain in the company where Prestige will have to serve that cost? Or what's the decision framework you will take when you are deciding on Popular? Whatever you can share at this stage will be helpful.
Yeah, sure. So let me take that. I mean, obviously we will, we will not be able to divulge any details. But again, long story short, we do take most of our decisions based on EBITDA per case, which is a fully loaded cost mechanism. We don't take dramatically, only on marginal costing basis, etc. We do take, an EBITDA per case decision, because we genuinely believe that all costs are kind of, variable in the longer run, right? So therefore, that's one sense of philosophy. And the other one which you just mentioned yourself, which is that our EBITDA per case is the highest in the country, is the highest, historically, in whatever last 18, 20 quarters, etc., exactly driven by the operating leverage and the premiumization, right? And the premiumization element, right? Even though in percentage, etc., it doesn't give a huge kicker because it's 10%, but the sheer impact it has on our rest of our overheads, etc., overhead absorption, etc., it gives us a huge kicker, right? So, and we will want to continue this, trajectory.
Will you be able to share the EBITDA per case between Prestige and Popular at some point?
We don't share that, right? So, I've given some examples on the BIO earlier, etc., and you should be able to draw out your, broad estimate.
Sure. Thanks. That's useful. Just one more question from my side. If I look at the advertisement spend, again, this was highest in many quarters, and I'm sure you have invested a lot in renovation. The 8 to 9% ad spend which you are guiding for, assume that it's the 8%, then the margin guidance of mid-teens, isn't it lower? I'm saying that the organization has a right to have a 20+% kind of margin in 1 to 2 years. Any thoughts?
I mean, I think, look, our strategy is looking at accelerating top line growth, and the principle is that we'll get operating leverage as we go along with that. And in this, in this run, we will focus on our key brands and invest behind them, right? The thing is that A&P doesn't necessarily need to be expended to do that. We get a lot of A&P efficiencies and effectiveness through the operating leverage as well, right? So at this point in time, we have sufficiency. And over a period of time, of course, I mean, we are guiding to mid to high teens. We've just started the strategy. It's going to take a few years to get there. And when we are in a position to give the next guidance after a few years, we will definitely come back to you and give the next guidance. But for the next few years, I think we are focusing on delivering this strategy and our guidance to you. Right?
Thanks. Wish you all the best. Thank you.
Thank you so much.
Jacob, we can conclude?
Yes.
All right. So thank you very much. I just wanted to say we will now draw the call to a close. Thank you very much for your participation, and have a great evening. And please stay safe, stay well. Thank you so much.
Thank you. On behalf of United Spirits Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.